beautiful people. Welcome back to another episode of MB2 Underground. I am Sarah Keifer.
And I am Joe Fox. Good to see you, Miss Keifer.
Yeah, you as well. I don't know if you noticed, but for our guest today, I decided to dress up and I wore my best blazer.
I definitely noticed. You are rocking the power purple, my friend.
Yeah, this is like my working girl costume. Yeah. So
I am woman, hear me roar.
Damn straight.
Beautiful. You're looking great as always.
Thank you.
Great to have you. So I'm pretty excited again.
Yeah.
About some incredible guests.
I'm excited because today I feel like you have a lot of knowledge and education around the subject that we're going to talk about. So there's a lot to add. I get to look at this also from the view of our listeners, because there's a lot that I know that I'm going to learn. So I think that this will be a really fun episode and chat with our incredible guests.
Absolutely. Yeah, the knowledge that these folks have, I think, is applicable to every single American. I mean, I would argue, maybe it's a little dramatic, every single human in the world, right?
Joe, dramatic?
No, but like seriously, like, do you have a mortgage, Miss Keifer?
Yeah,
I know, right? We all do. So, like, the knowledge that these folks have, right, impacts us on a daily basis. It's really significant, really important. I think our listeners are going to love it, and it's unique. It's just the first folks with this kind of experience and knowledge that we've had on the podcast. So I'm super excited. Without further ado, would love to welcome our incredible guests, Miss Brooke Reeb and Tye McClure. Welcome, guys.
Thanks for having us. We're so excited to be here.
Yeah, absolutely.
Thanks for coming in. It takes a real trooper to come in, 7.5 months pregnant.
Yeah, something like that.
Yeah.
Brooke, you look great.
Thanks.
7 months pregnant
so
in the middle
cute.
of Texas summer.
This is going to be a hot summer.
It is.
It's a long, hot summer.
I'm going to be honest, I'm really hot right now, and I can imagine, how you must feel. But we're really excited to have you both come in.
Thanks for having us.
So to kick us off, maybe help us kind of understand. I mean, the way I would describe your role is that you all are financial advisors for high net worth individuals. So maybe just give us a little bit more background on kind of what you do, maybe how you would define high net worth, kind of so on and so forth.
Yeah, I'll kick us off first. So Tye McClure, I am a private banker with JPMorgan's private bank.
Fancy.
Very grateful to be here. If you can't be sharp, look sharp, right?
I mean, seriously, you
That's
guys
what I'm
match
saying.
today.
Blazers,
Beautiful.
baby.
I mean, power blazers.
Joe missed the memo.
I did.
So my role as banker is really the relationship manager. My objective is really to deliver the entire JPMorgan Chase platform to our clients, kind of be a client advocate. Just from background, I've been in banking for 20 years, put myself through school, spent my first 3 years doing consumer lending and new accounts, graduated from Texas Tech with a degree in finance.
Guns up.
That's right, Recco, baby.
Yeah, go sports.
Moved into commercial banking where I was an analyst for a year and a half, an underwriter for a year and a half, and then 2008, I was like, hey, I know what I need to know. Great financial crisis was going on during that time.
Good timing.
Moved from the Dallas office to the Fort Worth office, knew no one, had no portfolio, very naive to take on that risk. But spent 7 years as a commercial banker, did very well. It's very challenging, but built out a really nice, robust portfolio. Wanted a more of a challenge, and so moved into a credit manager role where I led our team of credit analysts, underwriters, and officers in most of Texas and Louisiana. 2016 hit, oil cratered. Houston was half my territory.
Wow.
My personality is very much to be in front of clients, and I was a workout specialist, which is not what I wanted to do. Had the fortunate opportunity to move into private banking. Growing up, didn't know any high net worth people, didn't really understand that. Had a degree in finance, but was very fortunate to be on a great team where I was able to learn a lot. And given my commercial banking background, a lot of my focus has really been on working with business owners and developing out, transition strategies. So that's worked out very well for me. So here I am 8 years later, loving it, and don't see myself moving from the private banking world. So
Awesome.
That is me in a nutshell.
Appreciate that.
I love that.
Miss Brooke.
Yes. So I also work at JPMorgan. Tye and I work together, but I work on the investment team. So we really partner together to cover our clients. It's a really, really fun job to get to work with people and see the impact you make on them personally, their families, but then also just the greater impact we make on the communities they serve in.
Oh, I bet.
I previously, just kind of quick background, went to the University of Texas, studied finance, started out on the buy side of investing, so investing directly in individual companies, underwriting them, and then ultimately covering those portfolio companies, within the funds that we managed. And I did that for a number of years, and then I ended up making the change into private banking, which is a really good combination of the investment side with people relationship management.
Absolutely.
And so it's the best of both worlds where I feel like I get to thrive and balance, the skills. So it's really
100%.
fun. But yeah, Ty and I work together primarily with, I'd say, high net worth individuals, their families, primarily entrepreneurs is who we're serving. And, that also extends into, eventually clients will create family offices, endowments, and foundations as well.
Oh, that's so cool. Can I ask what constitutes a high net worth? Say it again.
High net worth.
That's a good question. And there are so many different answers that you could get. I mean,
So it's not like once you have $1 million, you're a high net worth value.
I mean, from my
individual.
perspective, $1 million is a high net worth person.
Okay.
I'd be curious kind of your take on the definition.
Yeah, gosh, that's a good point. There's so many different definitions. I'd say $1 million plus is actually a good benchmark.
Okay, cool.
I'd say we generally tend to focus on relationships that have even more than that. So that are, even if a lot of their net worth is tied into a concentrated company, public
Yeah.
or private, we're generally focused more on kind of the 5+ million opportunities, just kind of where their balance sheet is and where it's going. And I think where we really add a lot of value is as those balance sheets continue to expand and get more complex and sophisticated.
And then the fortunate thing of what we've developed out is Brooke and I kind of oversee a larger team that really kind of delivers the full breadth and depth of private banking from, $1 million and up. I mean, it may not be us directly, but the team that we have associated with is kind of in that space.
Yeah, absolutely. I mean, and the platform at JPMorgan is vast, right? Maybe the most vast in the entire world, right? From a financial
Absolutely.
services perspective.
Absolutely, yes. I mean, because you think about, we're JPMorgan, that's kind of the brand that we work with, but there's also Chase. So even people that do not have $1 million or $5 million or 25 plus, we've got Chase advisors, right? Chase, you might have heard of Chase Private Client. And so just through our retail locations across the world. So we can help anybody. It doesn't matter what level of wealth you have.
Yeah.
That makes sense.
So our listeners, generally speaking, are founders, core being MB2 partners, and every single one of them has had a liquidity event that is very, very meaningful, definitely puts them in kind of that high net worth bucket. So
The bougie bucket.
The bougie bucket.
I like that.
Well, and if you're thinking about $1 million in, net worth, I mean, you include homes and cars and actual assets and cash. It's not just, cash that is available to invest, right? It
Obviously.
adds up pretty quickly. And again, every single one of our partners is going to fall in that bucket. So what advice do you have for somebody, anybody, not just a dentist, who's been through a liquidity event, right? Just general advice, kind of what to do first.
Yeah, I mean, I think that kind of general advice is, if you've had a liquidity event, you really need to have a game plan of what are you going to do with that liquidity? What is liquidity? What's the goal? What's the objective of what you're wanting to accomplish with that liquidity? I mean, and that's really what we do. That's honestly my favorite part of this job is really the planning piece of it. And quite frankly, it's really helpful if you get involved early on, especially from like an estate planning perspective to prior to a liquidity event even being contemplated. Like, let's have a discussion. You really need to have an association or relationship with a financial professional that can really help you develop out that game plan. And it's really on, what are your goals? What are your objectives? That's really where we'll start. We'll kind of do a goals-based analysis of, here's where you want to be. Here's where you are currently. What are the expected future cash inflows? What are the expected cash outflows? What's your lifestyle look like to kind of, what is it that we were trying to maintain and what is we were trying to ultimately get to? And Brooke actually does a really good job of kind of talking about like our bucketing approach, which I think is really important.
So you guys can even help with that planning and goal setting process. It's not just like, okay, this has happened.
Absolutely.
Oh,
Let's do
absolutely.
this. It's
That's
how
the
do we
most
make sure?
critical part.
That's great advice.
Yeah, I think so. Look, I think where we add the most value is actually on the front end. It is the understanding the goals and the intent of your wealth.
Yeah.
And really marrying those goals to the appropriate asset allocation that's going to set you up for success for the rest of your life. And so we tend to use, we really get to understand and know the families we work with super well on the front end. I mean, sometimes we're talking to them for 5-10 years before they actually have a liquidity event, maybe even longer.
That's incredible.
Really understand them. And then we build out, pretty comprehensive analysis. We use some in-house tools at JPMorgan to build out an analysis to illustrate all of their goals and build out their wealth over time.
Yeah.
Now, the bucketing approach that Tye mentioned, I do think is helpful because a lot of people, they say, oh, I have this money and I'm just going to put it here, or I'm going to invest in this private equity deal, or I'm going to go buy, the S&P 500. They're kind of throwing darts at a board.
Yes.
And if you really break it down into buckets of, okay, here's there's 3 buckets I focus on: liquidity, lifestyle, and legacy.
Okay.
Liquidity bucket, that's what you're going to need over the next, call it 12 to 24 months, that you want to have, accessible and not take on too much risk, because those are funds that you need for that house you want to buy, that car you want to buy, that trip you're planning, etc.
You need to have readily available.
Exactly. So today, like a money market fund is a great place for that. But the second category is where the bulk of the wealth generally resides. It's called the lifestyle bucket. And that is basically building out between now and the end of your life how much you expect to need on an annualized basis. Okay. So what is your lifestyle spend? What do you spend? I mean, it's honestly usually very shocking when we do this analysis for our clients. They have no idea how much they're spending.
Yeah, isn't that fascinating?
Yeah.
And
simple like budgeting, right?
Yeah.
Forecasting. It's hard.
Yeah. And we should talk about a little bit about that too, but that's just some basic stuff that we can get into. But we build out a investment portfolio or an allocation just for that lifestyle piece that is going to help them sleep at night, and they don't have to worry. Even if you have major market corrections and downturns like we've seen in the past, you're going to be fine. And then the rest, we calculate all the numbers, is what we would put into more of like a legacy bucket. Okay. And the legacy bucket is really for next generation. It's for philanthropic giving. It's usually money that you have no intention to touch at all and is going for other good purposes. Yeah. And so that generally, because you're not touching it for multiple decades, you can take the highest risk. Yeah. You can do, a lot more private investments that have illiquid aspects. It can also include just more high risk, equity exposure, more sophisticated structures to just generate the highest return, since you're not going to touch it.
Wow, that's awesome.
So I mean, I think for any entrepreneur, any MB2 partner, dentist that goes through a liquidity event, I mean, I think that scenario, which is incredible and wonderful and so positive, can create kind of like a mo money, mo problems kind of scenario, right?
Say it with
Not
your chest,
to
Joe.
quote my second favorite rapper behind Mr. Eminem, but that's another
I was
story.
about to say, who's number one?
Yeah, Eminem. Long story. We know
Marshall
each other.
Mathers
we
to
know
you.
each other. We used to work out together. Anyway, so
You can't just say that.
I know, but we'll do it another time.
Okay, fine.
Like having, like you said, a game plan, like being prepared for that, again, that great scenario that's so impactful for your family and future generations, but
what you've been working towards.
It creates stressors, it creates issues. So we have a lot of very financially savvy, listeners, but some that aren't so savvy, and admittedly so, right? So like what would be some of those basic resources that you're talking about, either as simple as like reading the Wall Street Journal or other things? Like what are the things that you all would suggest folks that want to learn, that are starting that process?
Right. So as we talked about, we love to help people. So I think if you feel like you have a friend or want to get connected, we are also happy to help get them connected, right?
Awesome.
To just a financial advisor or somebody to help guide that. But I do think everyone, as you mentioned earlier, I think when we started the call, was just this applies to everyone in the world. It really does. And it is honestly mind-blowing to me if you didn't study finance in college, or if your parents didn't teach you this growing up. A lot of times you have a really fantastic job and a great income, and you don't know what to do with your money, right?
Yep.
And you just have never been taught. So I do think there's a lot of self-teaching that you can also do, and so that it does include reading, the Wall Street Journal. I'd say also just reading books.
Yeah.
I mean, that's what I learned a lot just by reading books, podcasts.
Yeah, absolutely. There's a ton of them out there.
I mean,
now,
I don't
yeah.
use TikTok, but I know a lot of people get finance advice on TikTok and Instagram.
Would you recommend that?
I'd be cautious. I love shout out Miss Dow Jones. She's great.
Okay.
If you don't know her already, but she's fantastic. She combines pop culture with basic finance topics and makes it super easy to
My kind of
understand.
page to follow.
Right up your alley.
But I would say just start, learning about it. There's also apps that are fantastic, and they can teach you so much about, we talked about budgeting and savings. So I use an app. It's called Intuit. It downloads all of your, your bank accounts, your credit cards, and everything, and then it tells you how much you're spending a week on
Food
gas or
yeah,
groceries.
It'd be my shame app.
Shopping, it makes you feel pretty bad sometimes, not gonna lie.
But
It's
that
none of my
knowledge is
business.
so powerful, right? Just knowing and understanding.
Right.
That's huge because you can't really make any good decisions unless you know what the heck you've been doing historically.
But I do think that knowledge is extremely powerful for sure, but it is extremely complex. Finance is, and so I do think that it's very important to make sure that you have a relationship with somebody that you like and that you trust and that is knowledgeable in this subject matter.
Oh, for sure.
Because we've seen situations where folks have gotten involved with private equity investments and they just don't have the financial acumen to really do that due diligence, and so partnering up with somebody, especially on a sophisticated financial product like that, is extremely important. And again, you've really got to have somebody that you have a relationship with that you like and you trust and is knowledgeable.
Yeah, I was going to ask, we talked about lack of planning, lack of education, trusting the wrong people. What other mistakes do you see when people are planning for their financial future?
I think everything is really kind of based upon risk and reward, right? The more risk that you're willing to take on, the greater the reward that you're going to get. If you have a financial goal, a lofty financial goal of something that you're wanting to hit, you're going to have to take on a little more risk. And so making sure that you got that appropriate balance, having somebody to help you develop out that game plan is extremely important. But conversely, we have clients who are taking on too much risk. And we've actually run plans before where it's like, hey, you don't have to have this much exposure on the private equity side. Private equity is great. It's got a great place for being within an asset allocation, but making sure that you're not overly concentrated in something that's illiquid is extremely important. But having the right balance, I think, is something important, and that's kind of some of the common mistakes that we've seen is just not having that balance.
I know this is a very niche metaphor, but it made me think of injectors. If you're ever getting Botox or something, you want to find somebody that you trust that'll say, no, you don't need any more, because it doesn't benefit them in any way to tell you to do what you actually need to do. They're helping you balance so that you don't look like a crazy person.
Risk reward in a nutshell. Finance 101 from
I love that analogy.
Thank you.
My wife would too.
That's what I just
She doesn't
kept
understand
thinking
the
about.
finance piece, but she got that.
I love it.
My kind of girl.
So let's talk markets a little bit, if that's okay. And I know you all can't give very specific advice, but tell me what your thoughts are on interest rates. Because again, my perspective is that it impacts every single human on the planet. Yeah, and maybe a little dramatic. There may be some tribes in Amazon, they don't give two flips about interest rates, but
You don't know what the
else-
tribes in the Amazon give two flips about?
Well, and I'm sure they're on their apps too, right? They're
They're
buying and
Intuits.
selling Bitcoin. But what do y'all think? Do you have any perspectives on interest rates? Direction, where we are historically, and so on and so forth.
Yeah, I mean, it's crazy how fast interest rates rose,
Unreal,
right?
right?
I mean,
Unprecedented.
from basically zero to right now, the Fed rate is 5.25 to 5.50. I mean, that was a record.
Yeah.
And so it feels high. It feels really high to us, right?
Yeah.
Because we've been so used post-financial crisis for 10 years. We had basically rates at close to zero.
Yep.
And you could go finance a house or a car for so cheap. Your financing costs were less than inflation.
That's
And
crazy.
It was basically free money.
We call that negative interest rates, right? Yeah.
Right,
Essentially, yeah,
right.
that's awesome. Yeah.
Yeah, that's
But if you
exactly
look
it.
historically and go back in time multiple decades, where we are today is actually not that high. People feel it, right? And it seems a lot higher just from the perspective of the last, 10 to 15 years.
Got used to it.
Yeah. And so, we do feel like right now we are at what we would call a terminal rate. We don't see any additional rate hikes coming.
Yeah.
And we do think that, there are a lot of green light indicators to the Fed to start cutting rates. Now, they're being a little cautious and patient because there has been some hot inflation print, so they're going to be really careful in terms of when they're going to actually start those cuts. But we think they're going to start at the end of this year. We think one cut in Q4 and then probably, 2 in the next half of next year to get us down to about a 4.5 to 4.75 by mid-2025. And I think over the next couple years, and this is all like a point in time, right?
Yeah,
Because
absolutely.
ask me in a week and
it'll
I'll tell
change.
you it's changed. But
Well, the data for this comes out on literally a daily, weekly basis, right? And there's a whole bunch of information that goes into
a lot
those
to keep up
decisions. Yeah, totally.
But we've seen the impact of the higher interest rates. It certainly has infiltrated, certainly consumers, right?
Yeah,
We've already seen debt loads go up and default rates increase, right? On their credit cards, on their mortgages, on their auto bills. And we've seen that unfortunately already happen and it's already trickled through. We've also seen it impact corporations significantly, where you've seen some slowness in growth across certain industries where they just deferred off spending, capital expenditures and acquiring companies, just doing typical mergers and acquisitions because the finance just didn't make sense.
Yeah.
So we've seen it come through. And I think it's had the intended effect. And so we feel like we've been able to avoid a recession, right? And we call it a soft landing.
Yeah,
we
absolutely.
do think the Fed is going to be able to lower interest rates and do it effectively. And I think hopefully avoid a catastrophe.
And I think from an investor perspective, like, a lot of our clients have been stuck in money markets because it's over 5%. It's like, hey, this feels good. I like this.
Absolutely.
Yep.
What we're really seeing now is with the anticipation of interest rates being reduced, it's like, let's go ahead and lock in the interest rates now, where we take advantage of the higher interest rates and kind of lock in that yield. So I think it's what a lot of clients are doing. That's what we're really encouraging a lot of our clients to do. But I mean, still 5% in money market feels good.
Unreal, right?
Yeah.
So just some historical context to y'all's points about interest rates. I mean, ask your parents what their first mortgage was. Mine, in the late 70s was 17%, right, for their first mortgage, right? I've got a home equity loan now. It's like 2 3/4 in 2021, right? It's ridiculous, right? When I graduated college, a little bit older than Mr. Tye there, U.S. 10-year Treasury was like 5.5%, 6%, right? Today, it's 4.29%. And that's up, like Brooke said, substantially from, 60 basis points, right, or 0.5% in kind of summer of 2020, right? But it's gone up so quickly, unprecedentedly quickly, right? But it's, like you said, historically, these are great interest rates, right?
Yeah.
Do you think we get back into that low interest rate environment? Or you guys, you believe in the soft landing? You think it's happening?
I'll let Brooke handle that one, but I don't think we'll ever get back to, well, not ever. I don't think we'll get back in a very long time, not in the foreseeable future, to where we had been, to where it's essentially zero. But you're the expert.
Yeah, no, I totally agree. I agree with you. I don't think we ever see a zero interest rate environment, at least for a decade plus. It might be the rest of our lifetimes.
Yeah.
I don't know. That was very unique. We need another pandemic, I think, to see that.
Knock on wood.
Now,
Yeah,
locking
knock
in a
on wood.
mortgage at under 3% and securing it for 30 years, I will never pay
No-brainer,
that off
right?
early.
Yeah.
No brainer. Yeah.
But I think our kind of where we see rates maybe stabilizing at is, call it maybe around a 3 to 3.5%
Interesting.
range,
Yeah.
which is still fantastic,
Yeah.
right? I think that'll happen probably in the next 2 or 3 years.
Couple years. Do you think the Federal Reserve will have to kind of change their inflation target upwards from that 2% to 3%?
It seems
to make that-
unreasonable.
Yeah.
I mean, I think that is almost unachievable
Right.
to get to 2%. I think 2.5 to 3 is probably more realistic.
Yeah.
And so, go ahead.
Tell us a bit. Sorry, tell us a bit more about why you think it's unachievable. Like, what's happening in the world that makes 2% just like ridiculous?
Yeah. Tell us.
Yeah. Well, you probably see it every day, right? When you go order lunch, when you go, I mean, I feel like I can't get lunch now for less than $20.
100%. Yep.
When you
Simple
have
stuff.
service
She doesn't
providers,
need a McDonald's either, though.
yeah, that's true. Maybe more bougie lunch than that. But service, right? I mean, we've had some things done at our house recently, and I'm just astonished at how expensive it is.
Yeah.
Yep.
And costs have gone up drastically. Labor costs have gone up drastically. Supply, the supply chain, it's just gone up significantly. And last year we were seeing double-digit inflation print numbers. A lot of it related to it's kind of post-pandemic with some of those effects. But everything is so much more expensive. It has a lot to do with the broader economy, the global economy, labor dynamics, supply chain, all these things coming into it. I just don't see how, with the pace that we're growing and the demand for the inputs, right, the goods and the services, they're so much more expensive today. I don't see how we get down to that level.
Yeah.
So there's levers that the Fed can pull, that they're trying to pull to reduce it, right? But I just think that a more normalized rate is above 2%.
Yeah, no, that's fantastic. Yeah, we've lived in a deflationary world since kind of early '80s, and it seems like that's changing, right? It's a secular thing, not just kind of a cyclical thing. But what about equity markets? Do you guys have an opinion on equity markets? Very fascinating stuff happening these days with AI, NVIDIA, and kind of all the things. Like, do you all have a thought or perspective?
Well, it's been a killer run, right? I mean, last year and year to date has been fantastic. If you were investing in just broad equity markets, you've done very well and made a ton of money. If you had a concentration in AI stocks or tech or communication stocks, you've done very, even better, crushed it. And we don't think that the run is over. I mean, we still see upside from here.
Interesting, yeah.
So, especially as a long-term investor, we don't generally focus on the next 3 or 6 months. We're generally focusing on 5, 10 plus years.
Makes sense.
And what are the themes that we like? So right now it's artificial intelligence, it's industrial companies, it's healthcare, especially like the GLP-1 drugs. And biomedicine. So we see a lot of more upside there, but AI is by far the biggest. And then outside of just pure equities, if you look at private equity markets and private credit markets, we see a lot of great opportunity to invest there as well. And, there's been some stress points, things like commercial real estate that we know are already seeing trouble, but there's a lot more trouble to come in the next 2 years. So we're getting ahead of that and putting money there to take advantage of those opportunities, those distressed opportunities.
Yeah, absolutely. Well, and that's the benefit of having advisors from JPMorgan, right? You guys are seeing everything and you have access to those investments that a lot of folks or a lot of institutions don't, right?
Well, and I would say too that some of the comments that I'm hearing from clients is like, hey, this AI boom or this tech boom that we're seeing, that seems very similar to what we saw in the dot-com bubble. And it's such a very drastic difference than what we saw in the late 90s, early 2000s. You had this big run-up in these tech names, but there was no cash flow associated with it. But these AI names, there's significant cash flow. So it's two very different dynamics than what we were dealing with before.
Yeah, it's fundamentally adding value as opposed to like diapers.com or whatever, doing silly stuff. Yeah, that was my first job out of college in the summer of 2000 was in the middle of all that. It was fascinating. What big global macro risks do you all see, right? Or things that people should be aware of, like in the next couple of years?
There's always macro events,
Always
right?
something,
And I
right?
mean, there's always the unexpected, right? Like nobody could have planned what happened in 2020 or knew about it.
Yep.
Or otherwise, we'd all be really rich from taking advantage of opportunities before and after. I think right now, obviously, there's a lot going on overseas internationally. So you think about the war in Russia and Ukraine that's ongoing, in the Middle East. You also think about elections
Yeah.
across the world. That's a big one we're talking about right now with clients. It's just the election coming up this year in the United States.
And it's just not the U.S., right? I mean, you said
Right.
around the world, like it's pretty fast. Like what's going on in France right now is unreal,
Yeah.
right? And kind of unprecedented. So yeah, I didn't mean to cut you off.
And
Sorry.
no, that's great. But look, I think every given day there are countless risks, especially whether they impact you directly to your day-to-day or if it impacts maybe your investment portfolio.
Right.
I think the biggest thing that we work on with clients is also the education piece, right? Of riding out the volatility and riding out the roller coaster. It can be very unpredictable. And if you have that plan in place from the beginning and you have that peace of mind and let's stick to the plan,
Yeah.
you don't let, all these macro events impact your decision making. Because you've been set up for success from the start. So
And I think that's what's important is making sure you've got a disciplined approach and you stay within your asset allocation that has been laid out. Because I think that these short-term kind of global macro events, we are not looking to try to perfectly time the market and try to get in and get out. Because if you're trying to time the market, you've got to time it right perfectly twice on the exit and on the entrance.
Absolutely.
And that's very challenging to do. So we take a very long-term approach, and all of our clients are long-term investors. But we make sure that we will maintain that asset allocation to adjust based upon different life events and whatever liquidity needs that they may have coming up.
Yeah, absolutely. Absolutely. Do you all see the U.S. federal debt situation being a concern? Is that something JPMorgan in general is worried about? Or I think I've heard Mr. Diamond give his thoughts on this, but I can't remember exactly what he said. But
yeah, I mean, I don't think it's talked about a lot. It's in the headlines a lot. We don't foresee it as a big risk. It has to be, it has to be dealt with eventually. And it's something that frankly keeps growing and getting postponed.
Yeah.
And just making sure that there is a plan in place to help reduce it over time, right? And so there's been a lot of mechanisms, talked about and put in place to help come down. But I mean, right now, it's not really a concern of ours.
yeah, no, that's interesting. Yeah, and as a percentage of GDP, it's still we're still not the worst offender out there. Right? You look
Well,
at
it's kind of
Japan
like,
and
where are you
Europe.
going to go?
Yeah, exactly.
Yeah, I mean, the can keeps getting kicked down the road, but I think for the next 10 to 20, I mean, it has to be dealt with at some point, but we don't see anything in the short term.
Yeah, it's just fascinating. There's certain things that are coming out, like the de-dollarization movement, and folks saying that King dollar is going away, and these are like thoughts and discussions I haven't heard since I was in high school, like in the '90s when we actually did have a balanced budget for a hot second. But we're there was in Times Square there was the debt clock, right, and it showed you what the federal debt was, and like people are starting to talk about it now, and it's just kind of fascinating to observe.
That's
But-
kind of terrifying. They just had like a count up of just it's just getting worse. It's
federal
getting
debt.
worse.
It was going up, not down.
Yeah.
And but anyway, people are talking about it now again. It's kind of interesting. But yeah, like you said, I mean, U.S. is still the best 30 shirt in the world, right? In terms of a currency and a place to just store capital safely. There's a rule of law here, and a thriving economy. Wow, awesome.
So preparation, planning, discipline. If we do have listeners that are gearing up for a liquidity event, that's how you recommend they get started.
Absolutely. And we talked about the goals earlier and the planning piece. I think it's really helpful. I mean, just good, healthy habit is to look at your goal, like know your goals, write them down, revisit them
Vision boards.
regularly. Yes. And I mean, I do this every January, but I look at them throughout the year, right? And so it can be short-term goals, long-term goals, everything in between. For me, it's like, I got to go to another Taylor Swift concert this year.
Obviously.
So that's my short-term goal. I got to afford that. But long-term, it's like, okay, we want to, maybe buy a second house, or we want to maybe go, not for me, but maybe like invest in a business or build a business or go back to school. And
But getting really clear on what those goals
really
are.
clear on those intentions, if you can define those, it's so important and critical so that we can be helpful in making sure you accomplish those, because we can set a time frame, a dollar amount to those,
Right.
and make sure it's achievable.
Well, understanding your existing situation and habits. I know you talked about you have some of these clients that you work with that have no idea, or they're surprised by what they're spending in a year. And starting by understanding what your current habits are and what your current financial situation looks like, because it exists whether you're paying attention to it or not.
That's right. Yep. And I think we touched on it a little bit, but in addition to goals, right, it's also just understanding your, how you think about money and really digging into, how you're earning money, how you're spending money, budgeting, how you're building out credit, thinking about investing as well, and, making sure that you're utilizing technology as your friend to help you, really build out an understanding of your balance sheet and where your money's going. And then we can also come in and be helpful.
How often do you guys work with your clients through like the psychology of money? Because I know that people have a very emotional attachment and understanding, and it really gets psychological in how they interact with money. I mean, y'all talk a lot about the relationship management side of it. How often does that kind of stuff come up where you're dealing with somebody who maybe, I mean, I guess that comes down to like the risk reward type stuff.
Yeah. I'd say I'll let you talk about this because you probably more than I feel like we are psychologists.
Yeah.
Obviously.
Like that's a lot of our job.
Absolutely.
It's a lot of hand holding, especially from my perspective on the investment side when there's volatility and we have an unexpected macroeconomic event and the market is all of a sudden down 10 or 15%. They freak out.
Emotional decision making.
Yes. And so it's our job to guide them through, hey, let's go back to day one when we started working together. The education piece, right? Reminding them that these downturns are normal. And the most important thing is to stay invested here. We do not want to pull out your money. As Tye mentioned, if you pull out your money, you have to make the second decision to buy back in.
Right.
I have never seen that work well, ever.
Yeah.
They always make more money by staying invested and staying committed to your plan. So, but it's very much, there's an emotional piece to our jobs and the aspects of the relationships we have. I love it. Like personally, I get excited in that. I'm very passionate about that. And I love to help people and help them, go through these challenging times.
Yeah.
But I don't know if you have any.
Well, no, I think that you're right. I think it really does boil down to the plan. And especially if you have a husband and wife or a spouse, you've got to make sure that you're both bought into that plan. You both have to agree to it. You may have varying degrees of opinions, but ultimately you collectively have to come together with a plan. We do help make sure that everybody's on board with what that plan is and kind of give the pros, cons, and different scenarios and let ultimately it's the client's decision. We are used as a resource to help them make an informed decision.
For sure.
But it all boils down to the plan and making sure that we have buy-in from the clients.
Yeah, this is so super helpful. How can listeners get in touch with you all?
Well, happy to share, our information, our contact information.
You can put that in the show notes, right? Is that how those work? Dope.
Sweet.
Yeah, we work. We basically cover clients all around DFW is really our focus area. Awesome. But we do cover basically, a lot of Texas, New Mexico, as well, and think of like West Texas too. But really predominantly our focus is DFW. However, we have partners across the entire world. So if anyone's listening who is not necessarily in our geographic region, we're happy to get them connected.
You know somebody.
Yeah, no, I mean, and MB2 is a very important relationship. I know that it has a nationwide presence, and so we have got folks, and we've got a team that we've developed to make sure that we can handle anything that comes up from anyone who needs some assistance. So always glad to help.
Yeah.
Love that.
42 states as of last week.
42.
Is South Carolina the latest?
South Carolina,
is that right?
yes, sir. Yeah, we're
That's
growing,
insane.
blowing and going.
What do you think they're going to do when we enter Hawaii or whatever our last state is?
I don't know. What about international? We got big plans.
Okay, slow
big
down.
plans. One last question for you guys. For me, can you maybe help us get CEO of JPMorgan, Mr. Jamie Dimon, on at some point?
We can certainly work on it. Yes.
I don't know
pressure.
if he's doing podcasts though.
He's tough. He's a tough guy to get a hold of and track down sometimes. But
Oh my gosh, I can imagine.
we can pull strings.
He
We'll see if we can make it
cool
happen.
plug.
he
Yeah.
sent our president, Mr. Justin Puckett. We call him Uncle Pucks around here. A text.
bucket.
A text. Like, how cool was that, right?
That is awesome.
You know, CEO
VIP
of
status.
JPMorgan, who is a legend in Wall Street and finance, and yeah, I mean that's kind of a cool personal touch. So
Listen, I don't know much, but I knew that.
you did, I know. Well, guys, thank you so much for being here.
Yeah,
Thanks
we
for
really
taking the
for
time.
having
it.
us. We
Thank you for
enjoyed
having us.
it.
Yeah.
It was awesome.
We'll have to do it again. Maybe we can do it every so often to kind of give us an update on the market,
Yeah.
kind of what's happening and with the world and economy, interest rates and such. So
And such.
I'd love to.
awesome, guys.
Thanks
All
for
right.
having us.
Yeah. Listeners, thank you for joining us for an incredibly informative episode of the MB2 Underground podcast. We will catch you next time.
Power to the partners.
Power to the partners.